Welcome to the weekly Titans of Industry show. We're having this interview in a very nerve-wracking timing after the resource sector suffered from a tumultuous week, and many have been shaken up real bad. This is exactly why these interviews are so valuable, as they allow you to gain insight as to what experts that have been in the markets for decades are out there every day, all day researching, are basically thinking. And that's why I contacted David Morgan, who's the premier silver expert with degrees in finance and economics as well as engineering. He created the MorganReport.com website and originated the Morgan Report newsletter. David is all about educating people about honest money and the benefits of a sound financial system. He has appeared on CNBC, Fox Business, BNN in Canada. He has been interviewed by the Wall Street Journal, Futures magazines, The Gold Report, and numerous other publications. David, how are you doing? Crazy week, huh?
Crazy week. Yeah, I'm still standing and taking my hits like everybody else. I didn't hedge the whole positions that we have on, but we certainly had told our website members that it looked a little frothy. Please book some profits if you're so inclined. And of course, I can't trade for everybody, and everybody's got a different personality, different objectives, different amount in the market, and all of that. So, a lot of the folks that are website members did take profits. They booked them. And some were like, I'm just going to ride it out. And I did, been stating that the markets have been trading differently, and they have. There's been a couple attempted sell-offs, but the Chinese were not in the market this week, and the sell-off started, and lo and behold, we got the typical what's happened again and again and again, which is this waterfall decline that kind of builds on itself, because once the downside momentum starts, then their margin calls go out, and then that begets more selling, and of course it can take us down quite significantly, which we saw this week. On top of that, we had this unexplained to this point in time huge decline in the British sterling, and that may or may not have accounted for some of the weakness in the precious metals. Nonetheless, interesting times, as you said.
I totally understand your point of view, and obviously these, I think, orchestrated press releases from the Fed and the ECB about the fact that they might start, tapering and easing, stopping the easing, maybe raising interest rates. It's going on for so long that once in a while the market will believe them, and this honestly what could have happened. But I want to get your take on many issues today. The main one is the big pictures. So from the matrix you watch, have we entered a bear market again in gold or silver, or maybe both, or is it just a healthy correction?
Well, so far it's a healthy correction. I mean, silver's sitting on the 200-day moving average as we're doing the interview. I wouldn't want to see it breach that, but silver, more than most commodities, can breach significant barriers like the 200-day moving average and give you a false breakdown. In other words, it could go below that and bounce back up. Most of the time, that area in most commodities will imply that you got a lot of damage and a lot more work to do. So I actually don't know yet. I think, from my years' experience, the way the market's traded, why it took place, how it took place, and when it took place, that the worst is over, that I expect it to repeat kind of what we saw in April. We had this big move up, sharp decline, a pretty sharp recovery. Then we saw the move from there all the way up to the $21 level. And then we had this high-level consolidation, what I call an indecision pattern, and that took place for a long time, but I kept warning my website members that I really thought we had to see some kind of pullback. And I've also mentioned on a lot of public shows, and probably not to my members as much as I could, that the function of a bull market is to shake off as many participants as it possibly can, and that there will be some scary corrections. And obviously we're experiencing one now, because even the believers are starting to have a doubt, are we still in the next leg up? Until proven otherwise, we are. And this kind of a correction does shake out a lot of people. But we have three significant things to gauge that on. One, silver started to outperform gold. Two, the silver-gold ratio started to decline. In other words, it went from the 70 region down in the 60s. Secondly, the volumes have been significant. you've seen it's not just the onesie twosie moms and pops retail investor coming in. We've seen significant money pour into the sector. Now some has taken profit, of course, and it's gone the other direction here over the last few weeks. The point being that a lot of new buying came in from January to present date. And the other thing that we see is that the sentiment has changed. A lot of believers are coming back in the market, and a lot of people that thought, well, it's over, it's done, it's not bottomed, and it has. So I think most of us are assured that the bull market is intact. Yes, this is a nasty correction. We've probably seen the worst of it. And it may take some time to rebuild. It's hard to say at this point in time. I really want to see what takes place once the Chinese that are now going to be using the SDR and making the market in the MSDR, the marketable SDR, making bonds, if you will, out of and making it liquid by using the renminbi or the yuan into the system of the IMF as a new member. So there's a lot going on at the same time, as always, especially in a financial system that really doesn't work. The banking system continues to come up with other ideas, a lot of rhetoric, like you said, that they're going to raise interest rates, and they keep mouthing different things to try to maintain their idea about how the markets are doing better, when in reality they're not. In fact, they're getting worse by the day. Nonetheless, whether or not this SDR will have a major effect on the overall trend, which is down for the fiat system at large, meaning every fiat currency out there. But will this, new wrinkle in it stop that for a while or curtail it for a while? And the answer is it probably will.
So that's some very astute analysis. And you know what? About hot money and day traders and all this kind of yield chasers, they have been shaken out real bad by this correction. And this is, honestly, that's very good for people who really want to invest in great companies, because they put them back in bargain territory. I want to ask you, David, about this. And this is about silver. And you've been around for such a long time. Has silver always been a byproduct of base metal mining for the most part? Why do you think so few designed their model, their business model in advance, to mine strictly for silver? Or is this just been going on since Nixon closed the gold window, and before that there was plenty of silver mines around?
Yeah, great question. In fact, I think you're the first one that's ever asked me that. I can't give you the exact dates, but I could certainly give you the correct idea. It's only been in the last century or so, probably less than that, maybe 50 years for sure, more like probably 60 or 70, where silver's been primarily a byproduct of base metal mining. And it's always been that way, disposing the earth. However, in the early days, going back to like the conquistadors, back when, the Spanish really ruled the empire, was the biggest empire, silver was disposed to the surface of the earth, in these vast deposits. So there were times where these silver deposits were pretty much silver gold deposits or gold silver deposits, and not a lot of base metal. But those were taken out of the ground because they're easy to see and easy to get to, and was what I call burrow mining. I mean, this was literally human labor only in those days that took it out, and so those were depleted over a few centuries. And then as it got harder and harder, you got into these different deposit types that were not as easy to find and contain a great deal of copper, lead, zinc, and even 13% of the silver supply as a result of gold mining. So the answer is no. Actually, in the beginning, there were, more or less pure silver mines. In fact, there are none now. The last one, I cannot recall the name of it, but it was in Mexico. It was a very small mine, and for all practical purposes, that was a pure silver mine. It had very little other minerals in that deposit, but those are extremely rare. They really don't exist now. But at a point in history, yes, there were ones that had, let's say, very little dilution with other metals, be it base metals or with gold.
That's very interesting, and this brings me to our next question. In our analysis at Wealth Research Group, we have reached the conclusion that silver is such an incredible precious metal because only millionaires, which is what we refer to as investors who are focused on the resource sector in order to maximize gains and speculate in a smart way. So anyway, only them consider silver as money today. It has been demonetized by governments and banks, and therefore the silver gold ratio has not been close to 16 to 1 since 1971, basically. And that's why there's an insane potential if central banks begin to accumulate silver again. Are you seeing any evidence of this? Because once central bank starts doing it, they will all follow suit and copycat it.
No, I haven't. I mean, there was a rumor, more or less, that India was keeping silver at a substantial amount. The truth is they hadn't, and the amount that they had was rather minuscule. And on top of that, what they actually held was not 99.9 fine. It was more in the 90% range as far as fineness was concerned. Not to my knowledge, and I'm pretty well connected, as you know. However, you bring to mind that I had a fund manager that I won't name that was significant size, and he and I had a fairly long discussion about why silver could, but not would, could potentially be the game changer if something like that were to occur. So as a quick talking point and a hypothetical or thought experiment, if the Chinese decided, for example, or you could pick some other nation state, we're just doing a thought experiment, decided that silver was actually more strategically preferable over gold for, let's say, purposes of negotiation. In other words, like they hold in the REE space, the rare earth element space. So they pretty much command that market. If you want to command the precious metals market, you'd actually go for silver, not gold. And that's the premise of what this fund manager was telling me. In fact, he's going to write a paper, a white paper, and I don't know the length. It's going to be substantial. He's doing a lot of historical work as well as present day. And then he wanted me to present it on the QT privately, in other words, to some of the fund managers and money manager types and even government types at one of the bigger conferences in Asia, which I was willing to do. Never happened. We talked about it. It only went that far. But the point is that no government's interested in remonetizing silver. And if we have the further breakdown of the monetary system at large, and I'm certain that we will, I do believe strongly that gold will be resurrected as a monetary metal in some way, shape, or form. I'm certain we'll never go back to a true gold standard, a gold coin standard, which is the fairest and most authentic way of keeping the power with the people, not with the government. But nonetheless, that won't take place. But some probably pseudo gold clause or gold cover will be enacted. I do not see silver being in the monetary system at all, which is an interesting point to think about again, because will silver become the new gold once gold is part of the, let's say, world currency? And the answer to that is unknown. But it's a very small market, and it may be the only place you can go that's, again, still outside the system, because once gold is reestablished at a monetary level of some sort, it may be more, less desirable as a hedge, and silver may become the hedge. But this is way out in the future. I think the currency game is going to continue absolutely as long as possible. I think the SDR is more or less a trial balloon to see what further games the international banking community can pull over the nation states and, of course, the subsequent people that live within those nation states. And further, I listened to an interview by Rory of the Daily Coin, and he interviewed V, the economist, and there's a lot of good thinkers out there. And V brought up a very interesting point, which I'll repeat, and I want to give him credit, obviously. And that is that the AIIB, the Asian Infrastructure Investment Bank, is far more significant than the IMF, and I agree with him. And he also, and I don't want to say he said and get it wrong, but if I heard correctly, there could be like a merging between the two. If you look at the AIIB, basically every meaningful nation state on the world has joined, with the exception of the United States. I mean, England's in there. And let's face it, the Anglo-American empire that I constantly talk about is the axis between the London and New York banks, and they've been in control for a very, very long time. But the Londoners are basically hedging their bets, or maybe they have another motive, I don't know for certain, to stay very close to the Chinese by being part of the AIIB. At the same time, of course, they are working with the, let's say, U.S. entities. So very, very interesting times, as we all know, very volatile times, and times where people really need to do their homework and stay on top of things by listening to interviews, such as yours. I'm not trying to, tout myself. Some people like me, some people don't. It comes with the territory. Point being that things are changing rapidly. And because they're changing rapidly, you have to get a pretty good idea of what's really going on if you want to protect yourself not only financially, but there's other methods that I think are important these days. You look at what's going on with Florida, and I know I'm drifting off. The point being that, food preparation, extra water, that type of thing is something I would probably have never mentioned a decade ago. And now I do, because I think it's important that the times are so unpredictable and there's so much uncertainty that having, let's say, an emergency prep or kind of a prepper attitude outside of just the financial side is probably very worthwhile.
Yep. Just as a quick yes and no question, did silver was there a silver standard in Mexico throughout its history? I know that it was used as money in Mexico for a very long time.
Yes, it was, and they did the Roman approach, which means that you had a certain weight to the coin, and then they brought in the coins, and then they re-stamped them or remade them with a lower percentage of silver, but same face value, and they did that a number of times. So now it's been done over and over. I mean, it's the same old story, it's the same old crime, and there's going to be some heavy dues to pay, because none of these systems have ever gone very far without huge problems for everybody involved. I mean, even the bankers get to suffer when this thing unwinds further. And it's unfortunate because, the truth works and the non-truth doesn't. I mean, a lie can't work forever. And the whole system, as I've said many times, is based on the lie that you can print wealth. Well, you can't. And as I jokingly say, I've said in other interviews, if you could print wealth, Zimbabwe would have been the richest place in the world. But obviously it collapsed. So we're facing that in our future, and it's collapsing. I mean, normally these things do accelerate at some point, but we really haven't recovered from 2008. Anyone that does some honest to goodness research and looks at the real numbers can determine pretty easily. Yeah, there's been some sectors and some innovations and a few things here and there that probably have been on the upswing and positive. But if you look at it from a macro perspective, it has not. It's declining still. So we have some tough times ahead of us. But again, I'm very positive about the human spirit and that we'll overcome it. And in a way, from an American perspective and getting older by the day, I think in a way it's, I don't know if I want to use the word justified, but I think it is important that we get this great shaking or this reset, or however you want to frame it, to reevaluate what's truly meaningful in our lives, because too much is going on in the financial markets when like 40% of what's going on GDP-wise is just churning these accounts over and over and day trading and moving financial instruments back and forth and leveraging instant rate swaps and on it goes. And nothing significantly important is coming to the bottom line, meaning the ground, the physical economy that actually helps people get, have a better life or leisure time that they can learn more, really significant things of the human experience when it's all about just chasing meaningful life. And maybe we have too much stuff. Maybe we've gone too far. Maybe the pendulum needs to swing back. I think the millennials are really on to things. They think much differently than the boomer generation, which I'm part of. For example, it never occurred to me when I was living in suburbia that one of us on the block might buy a lawnmower and share it with all of our neighbors. I mean, suburbia where I lived for some time, these little itty bitty lawns you could mow in probably 10 minutes, but everybody had to have their own lawnmower. Millennials don't think that way. A lot of them think about sharing things or not even owning something. They think about, transportation is transportation. They'll use the Uber app or Lyft or one of those type of things instead of ever deciding to buy a car. So there's a big shift going on, and I think that this is a good thing overall. I think to reevaluate again what it really means to have, let's say, a meaningful life. It's not all about chasing the dollar.
Well, in one word, you just said deflation. Lastly, David, I want to get your perspective and on how to guard and protect your portfolio, and especially about securing gains. And could you, and this is something that's very generous of you to share, and I'm sure the listeners would absolutely appreciate this. So could you tell us the ways in which to position your size of investment, the type of resource stocks to focus on when you take gains? How do you do it? Do you buy in trenches? Walk us a little bit through the process here and the system in general terms, obviously because of respect to your paid members, because people need a way to have a system to protect their wealth basically from their emotions.
Well said. Well, my philosophy pretty much when I started the Morgan Report was to make certain that as an editor publisher, I would help as many people as I possibly can and to not make the mistakes that I made. When I was young, I was pretty much entrenched with the small story stocks, I call them, where these stocks that had properties or projects but weren't really mines, had these fabulous stories and promoters behind them, and basically a lot of them don't really do much other than promote the stock, and it's really moose pasture. So when I started, I divided it into top tier, mid tier, and speculative stocks. And when I started the speculative stocks, which I wasn't going to touch, I didn't really want any penny stocks when I started thinking about the model I was going to make and how I would invest myself during this, what I think will be the biggest bull market in the metals ever. But there were so many at that time in the early 2000s, late 90s, that these guys and gals that own these projects or properties were selling their second home, selling their boat, getting down from 2 cars to 1 car. I mean, they were doing whatever it took to hold on to these properties, which made it actually pretty easy pickings in a way, because everything that wasn't really valuable just got, was walked away from. So what was left were projects that were pretty easy to speculate on. And we had great success in the early days, but so did many other people with, let's say, less value-oriented propositions, because the sector got very, very hot. So a lot of companies that really had not near the merit that some of the picks that we had. I mean, we had picks more than anybody else, and I'm not a geologist, that actually went from a speculation into a full-blown mining project and is mining goods, mining, minerals. And I say that with some authority because, one, it's true, and secondly, it wasn't as difficult as it might sound because of the timing. Nonetheless, I'll come back and answer the question. Sorry, I'm being long-winded. You want big money in big companies, mid-money in mid companies, and speculations are just that. Everyone likes to get that stock like silver or Western Copper that became Western Silver, that was bought by Glamis and then bought by Goldcorp. I mean, that Penasquito project is quite immense. Of course, Goldcorp's having some issues with it as we speak. Nonetheless, I mean, I think that thing was about a 40-1 for our members. But we had some losers too. But so the idea is, one, how much do you put in the precious metals? When you subscribe to the Morgan Report, there's a white paper called How to Use the Morgan Report. In that, I stress, if you have this much money, and you can just do the percentages, you should have like 10% in the metals overall, 20% if you're aggressive. If you're older, 20% aggressive, half could be in the physical metal, divided like this, depending on your age and your outlook. And then the other half would go into the mining sector, resource sector, because we do much more than just gold and silver. And it would look like this. It would be like 60% in the top tier, 30% in the mid tier, and 10% in the speculative section with equal dollar amounts in, let's say, 10 speculations or at least 5. And if you do that, you're not going to get hurt badly. Too many times these storytellers come up with these fabulous stories you can't lose, greatest mind on the planet, blah, 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 blah. And unfortunately, sophisticated and mostly unsophisticated investors love the story and put too much money in the stock. And then if it doesn't perform as they were led to believe or believed it would, they get hurt badly. I don't want to see anyone get hurt badly. And certainly we've had a couple that really, the story was great, but they didn't work out. But I've always kept them in the speculative section, and for a reason. It's a show me, don't tell me kind of thing. When, in fact, going back to Western Copper / Western Silver, that company and many of ours have done this, have moved from the speculative section into the mid-tier section. And we move them up in the portfolio. And some of those have moved from the mid-tier into the top tier. So as these companies become, let's say, more and more real, less of a story and more show me, don't tell me, they're actually doing what was expected, which is rare. They'll move up in the hierarchy of how we outline the model portfolio. The main thing I can tell people is, as much as gold and silver makes sense, and I've made it my life, you don't have to have everything you own. There's lots of other areas to invest. The main thing today with this contraction globally is to have low debt. You want low debt and really smart value-based investments.
David, that's absolutely an incredible answer, and I love the fact that you put together so many examples for us. Honestly, that's exactly what every investor needs to think about: how to strategically and systematically divide as stock picks. Never fall in love with any one company, and make sure that you're positioned in such a way that no company can hurt your overall standing. I've really enjoyed this interview, and quite frankly, I've learned a tremendous amount of critical data. I would like to know how listeners can gain access to your work. Please tell us a little bit about your products and everything.
Yeah, the best thing to do is just go to themorganreport.com. Give us a first name and your best email address. It's a double opt-in, so I have to verify it's really you. And we'll send you the Riches and Resource Report, and then you'll be on our weekly mailing. And there's lots of advantages to that. And that's the best way. Some people can just jump in and do our paid service, which is, website membership situation. And that's explained at the bottom of the Riches and Resource Report. We certainly take our work seriously. We do have a few things that no one else has. We have an alert system that's a widget that our support staff designed, and it pops up on your screen. So like if I see, if we have a buy on something that's important to do it like today, which is rare, that'll pop up. On a sell, it could be more important, and that would pop up on your screen. So it's something that, we just go that extra mile for everybody. So we have the alert system with the Morgan Report Premium Service. I do videos. I show the trades that I make. And I have a dialogue with the membership, which means that you're allowed to send 2 questions per month to us, and we guarantee you'll get an answer. Sometimes I'll answer for the group, in other words, all website members, because it's beneficial to everyone. And at other times, it's really specific enough where myself or one of the staff will just send back a response.
David, epic stuff. Great interview. Thank you for your time, sir, and I hope everyone enjoyed this.
Well, thank you.
In this summary, we go through the key thoughts from silver guru David Morgan. David talks about being hedged and well diversified before corrections, and this ties into our special reports about intelligent asset allocation, position sizing, and stop losses that you will definitely want to check out on our website. David points out that despite this correction, there are numerous indicators that are very bullish with regards to precious metals, and the bull market is definitely on. If you really want to become a student of the industry, read our free reports called Millionaires, Outsmarting the Dollar Banksters, and just be light years ahead of novice investors. You'll be so much better off. When corrections happen, people that do not have real conviction are wiped out of the trade. And that's important if you want to buy
mining stocks cheap. So we focus on steroid stocks and potential takeover targets at Wealth Research Group. So make sure you read our reports on these two different niches. And you definitely want to subscribe to our free letter if you want to get our alerts about stocks that we vetted and did our due diligence with. We've had a lot of success this year. Regarding central banks, David says the mess is insane and the currency supply is out of control. Make sure you educate yourself about how to truly protect and guard your savings, because another 2008 is definitely baked in the cake at this point. Read Uncharted Waters and Central Banks The Endgame on our special reports section, or even take a look at what I'm doing personally with my own portfolio, no holds barred, with Four Seasons portfolio special report on our website. Please make sure you realize that what's between your ears is your greatest asset, and you want to keep filling it with important info. Our mission at Wealth Research Group from day one has been to provide you with content that will make you wealthier over the course of your lifetime. So thank you for tuning in, and definitely make sure you're with us for our next interviews, as we got some crazy titans coming on the show in the next few weeks.